Welcome back to Newsmax Prime. Wall Street made another attempt at a turnaround today. Meantime, markets in Asia and Europe struggled to gain ground. But American markets opened higher this morning. However, investors are still trying to shake off fears about the slowdown and the real problems in China. For more on this, we welcome the Managing Director of ARK Financial Management, Bob Wiedemer, who's checking in from Washington, D.C. Bob is also the author of the Wall Street Journal bestseller, Aftershock. And also joining our conversation, Bert Dohmen, the president of Dohmen Capital Research Institute. Bert wrote The Coming China Crisis, and he joins us via Skype from Lake Tahoe. So, Bert, if the book were coming out today, would you say the current China crisis? Is this what you were predicting?
Yes, actually, it's exactly what I wrote about 3 years ago, and the events since that time have been exactly what I said. Last June was actually the first sign that the Chinese government was losing control. The overnight interest rates tripled from about 7% to over 25% in one night. And that was a sign that the Chinese were starting to have troubles. They've been very good at hiding the difficulties. I've been saying for the last year that they have an enormous credit crisis. Private companies could not get loans at any price. So a lot of other ways were found, like financing of letters of credit, of copper commodity purchases, et cetera, et cetera. There's so much fraud in the system right now. It's a conservative estimate is that there's about $10 trillion of defaulted loans, and that was a year ago. So right now, after this crisis, it must be much, much more.
So China has real problems, Bob, with the Chinese difficulties. How much does that influence the current challenges we're facing in this country?
Well, it influences a lot because, frankly, China has really been the growth engine for the world since the financial crisis. Nobody's done more financial stimulus, as Bert said, than China. And ultimately, it's going to blow up. But it's been a very important part of the growth story since the financial crisis. So I think it has a big psychological impact, certainly has an economic impact. But as many people point out, we're not completely dependent on China. But I think it has a big psychological impact on the idea that the world economy is growing. That's really been driven a lot by China. And if it doesn't, the world won't.
So, Bob, with what we've seen this week on Wall Street, is it a crash or just a correction at this point?
Well, it's a crash, but I think it'll become a correction because I think the Fed will intervene and print money. And I don't mean just delaying an interest rate increase or anything like that. I mean, I think the Fed will ultimately, if need be, and if this goes down 20% or so, I think the Fed will do a QE4. They'll print money. I don't think they'll have much choice. Otherwise, it will become a crash and not just a correction.
And, of course, printing the money has been given that fancy title of quantitative easing. Bert, you've been warning about it. In your recent Wellington letter, you say global financial markets are playing a shell game thanks to actions like quantitative easing. What will happen once that kind of manipulation stops, Bert?
Well, actually, they tried to stop it, and that's what all this talk this year was about, the Federal Reserve interest rate hike. I was on national television in October of last year, and I said there will not be an interest rate hike. In fact, the next significant move from the Federal Reserve will be to have a QE4 in order to fight recession. I believe that we're going into a worldwide global recession next year. And, people still talk about 7% GDP growth in China. That is totally fictitious. First of all, it includes governmental expenditures. I've been saying for the last year, the private sector in China is in a recession. And everything that you look at, electrical consumption, car freight loadings, the Baltic Dry Freight Index, which is the cost of shipping goods, most of it to China, is at a new record low, lower than the crisis low of 2009, lower than 2002. These are all external numbers that don't come from the government. You cannot trust any economic statistics coming from the Chinese government or from the U.S. government. They're all phony baloney.
Well, with that phony baloney, there is still the option for the Fed to raise rates. Bob, your take on that. Will we see the Feds touch the rates right now, or are they just going to keep things where they are in September?
Yeah, I think it's quite likely they won't raise rates. I think there's a lot of interest in the Fed in doing so to show their confidence in the economy, to show that we're all getting back to normal and financial crisis completely passed. But I think with what's going on right now, there's a really good chance that at Jackson Hole or sometime after that, they're going to announce that they're going to think about a rate increase later, not do it in September. That would be my guess now.
All right, very good. We will have to leave it there. Bob Wiedemer, we thank you for checking in from Washington, and Bert Dohmen, we thank you for your thoughts from Lake Tahoe. Enjoy your time, because it sounds like we're in for a rough ride. And speaking of that, Bob Wiedemer recently recorded a video explaining why we might see a market collapse. Simply go to aftershockinfo.com.